Well, Rob, we're seeing a slight improvement on the markets today, but of course we have those non-farm payroll numbers out of the US this afternoon, so it could really all just turn around quickly again, couldn't it?
Yes, expecting a negative number, minus 125,000 about, and if it's anywhere worse than that, I think the market will pull back aggressively. People are covering a bit of the shorts that they took overnight and lightening the short positions, but definitely short is the way to stay. And we'll have to take a look if those employment numbers can improve. But if they don't, I think that we'll have another bout of selling.
Of course, we have Independence Day on Sunday in the United States. Monday is a public holiday, so really people wouldn't want to be taking big positions ahead of that long weekend.
No, I think that's why you saw some of the short covering come in today. Not because they thought that the data would be any good, but I think that they will lighten some of their loads over that weekend. But if it's very negative data coming out on those non-farm payrolls, I think they'll still be selling and people will still stay short over the long weekend then.
Well, of course, the non-farm payrolls are really just the culmination of what has been a pretty gloomy week for economic data. We had those ISM numbers out of the United States last night, a little bit worse than expected. We had PMI out of China yesterday, really disappointing the market. Our own PMI in negative territory. And of course, we've had a couple of jobs reports out of the United States this week, the ADP employment report, and yesterday we had initial jobless claims, and they're all really pointing towards a negative number today, aren't they?
Yes, they are. I think that people are expecting a negative number, and it's just how bad that number is. Our PMI going under the 50 points down to 48 shows contraction rather than growth. That's very disappointing for us. Also, we've had a little bit of extra spend that's been coming through for the World Cup. Obviously, that will only flow through in the next quarter. But yeah, very, very poor numbers. If you take a look at the top 40 shares over the second quarter, the only shares that really performed well were the gold shares. I think Anglo Gold Ashanti was up 19%, but the market as a whole was down 8.2% for the quarter, and it's been every month that it's been down. So April was down, it was negative. May was down 5.2%, and June 3.2%. So the contraction in the second quarter hasn't just been in June, but it actually has been over the 3 months leading up to the end of the quarter.
Well, we really seem to be in a bear trend at the moment, and I think we have crossed down below some key technical levels. Just take us through perhaps maybe on the Dow Jones. We are below 10,000. Do we need to break back above that 10,000 to end this bear trend?
Definitely, I think we need a very good bounce to get above that 10,000 point. It's a psychological point, a psychological level in the market, and we need a very good news coming through and economic data coming through to get us back through 10,000. If it doesn't, there's still another 10% downside if we carry on in this negative trend until we start to settle at newer support lines.
And of course, these jobs numbers really are all important because we're not going to see a sustained recovery. And this is something you've been telling us often on the program. We can't have a sustained recovery if consumers aren't spending, and consumers won't spend if they don't have jobs.
Yes, the American economy still drives the rest of the economies around the world, and their consumer is 70% of the GDP, and that consumer cannot recover if there's no jobs being and no new employment coming through. So absolutely, we're not going to have a sustained recovery without new jobs coming in and unemployment weakening.
Of course, we are about to enter reporting season in the United States. What would you be wanting to see from companies who are reporting back to the market?
We're going to have to see really good numbers. They've cut a lot of workforce over the last year and a half, and that's pushed up their numbers. And their numbers are looking relatively good. They're positive, making good money. But I think that within that, they're going to have to start employing people in those numbers. So if we do start to see some positive numbers come through, I think employment will have to follow that, and they can't be too nervous, and they have to back themselves to employ people and carry on growing. I think if the third quarter reporting is very weak, it's going to lead to more unemployment and very negative. So it's going to be a very interesting quarter, and I think that the turning point, whether we're going to have a double dip recession, will come in this third quarter with the earnings.
Well, a little bit of positive news coming through on the local front today, and that was vehicle sales numbers for last month, and they're still looking pretty good, up by 20%.
Yeah, it's not a bad number. The previous number we were up 35, so down from the previous set of numbers, but still positive. And hopefully that will move up again. I think the World Cup has also moved up. There's a lot of heavy vehicles, buses, etc. that will come through in the third quarter. So possibly good numbers coming forward there, and a sector that does employ a lot of people in South Africa.
Well, we saw shares in BHP Billiton perking up slightly this morning, and that followed news coming out of Australia that the Australian government has capitulated on that super tax on resource companies and has settled for a slightly watered down version, which looks pretty good for resource companies.
Yes, I think so. I think most of the tax will only just be on coal and iron ore, and not the rest of the general minerals. So that's very positive. I think it came from 40% down to 30%. At 40%, and the way they had structured it before, it could have impacted BHP's earnings by a third. So it's made a really big impact, and they've definitely got a watered down version. Very positive for BHP Billiton.
Well, you mentioned, Rob, the gold shares had bucked the trend in the second quarter and risen quite strongly. AngloGold Ashanti used as an example. We are seeing gold shares coming under pressure today, though. We've seen that gold price coming off sharply. It's about $50 below the high that it hit 2 weeks ago. Why do we see gold acting like this when we have so much risk aversion in this market?
I think one of the reasons is that because of deflation, there's no inflationary risks. And I think that therefore this very high gold price, you can take your profits. People are taking profits there, and they don't have to hedge against inflation. So it's just they don't have to hedge against inflation, so they're taking profits straight away. And maybe they're even going to cash for a little bit of time in the short term while there's this very big uncertainty. But still holding above $1,200, and I think if we stay above $1,200, we'll then retest again the highs.
Rob, Ghana, Uruguay tonight, 8:30 at Soccer City. I hope you're going to be rooting for Ghana. What sort of score do you think we're going to see coming out of that?
Yes, Bagana, I say we're calling them now. No, I think we'll see a 1-0 to Ghana.
Rob, have a good weekend. Thanks very much for your time today.
Thanks very much.